So my pitch to you today, and my pitch to your clients, is to take some of the FUM that's in this little piccolo economy and put it into the venti economies of China and India, and to reallocate meaningfully towards emerging markets. So you should do it because these economies are too big to ignore, and because it offers diversification into larger cups. But you should also do it because emerging markets is going to outperform. So I know there's been other presentations about emerging markets, but I'm going to give you my reasons why I think emerging markets is going to outperform. Number one, growth. So emerging markets as a group is growing at twice the speed of developed markets. It's around 4.5% to 5% versus 2 to 2.5%. So that's significant. Secondly, valuation. Emerging markets is trading at only 11 times PE. China is trading at 11 times PE. MSCI World's at 16 times PE. Australia is at 18, 19 times, and S&P is at 19 times. That is one of the biggest gaps that we've seen in the last 2 or 3 decades in terms of valuation. If you add those two things together, growth and valuation, the case for emerging markets gets much stronger. Emerging markets are growing faster and they're cheaper. So if you look at on a PEG ratio basis, what you're paying per unit of growth, there's a very, very strong case for emerging markets. Thirdly, diversification. As I mentioned before, I run an Asia fund. Asia is home to some of the best technology companies in the world. I have 34% of my portfolio in 4 stocks: Samsung, TSMC, Alibaba, and Tencent. It makes the acronym STAT. They're Asia's version of FANG. And while most investors now have some exposure to FANG, very few have meaningful exposure to STAT. And lastly, policy optionality. We've heard from many presenters today that developed economies are near the lower bound. There's not much optionality in terms of monetary policy or fiscal policy. Emerging markets are different. Rates are still very high. There's room on the fiscal side. A lot of the economies are more controlled. There's industrial policy possibilities, and there's also currency policy. So for those reasons, I think EM is going to outperform, and I challenge you to take some of your piccolo allocation and put it into emerging markets.